The broadcast is now starting. All attendees are in listen-only mode.
Greetings, traders, and welcome to the webinar for today for the Day Traders Action and Boomerang Day Trader update on our software, and welcome to 2018. Just real briefly here, I'd like to do a sound check so I can make sure that you hear me okay. And I sure appreciate it if you can let me know if you can hear me okay just by typing a Y or yes in the platform there. And thank you so much. I was getting started and had a little bit of a sound problem. I think we fixed that. And give me a quick second here. I'm just going to do something real quick to start us back from the beginning. And give me just a second. So I hope you're doing well. Hope you're having a good new year. It has been one relentless upside market again. Doesn't seem to want to pull back, and that's a sign of you-know-who's, and they're propping the markets up. You always know that, and we'll talk about that more here, but let's get into the markets. And first of all, let me just get our introduction going here. Good to see you all. We're going to have a great webinar today. Just remember that futures trading is risky and only risk capital should be used, and that's capital that you don't need that won't change your lifestyle if you lose it. That's very important to understand. We love to tell everyone about the risk disclosure statement. So once again, welcome to the webinar, and we're going to be talking today about a bunch of different things in relation to Boomerang, but just kind of getting caught up on the way things are going in the markets and with things that relate to our trading in the markets. Right now, what we've got is a tremendous upside market that just won't seem to stop. I think it's a combination of just the economy improving tremendously, the positive mood in the air, and of course just the market catching fire. And a lot of that's for a variety of different reasons, but it's good old-fashioned nuts and bolts, jobs, 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 economy, uh, money coming back into America, just a rebuilding America, talk of more security, talk of the um, situation with the unemployment numbers dropping substantially, some of the lowest numbers we've had in a long time. These are all hardcore things that get that stock market cooking. Well, I'm of the personal belief that because it's been going on now literally a year, it's pretty relentless. And I think a few months ago, in spite of all the good things, I think it was still ready to go higher. But what was noticeably absent was any lack of a 2 to 3% type pullback, and that right there is a sign that the market's being rigged higher. I think that what's happening is we're getting a rigged up market with the Federal Reserve coming in. Their stated goal was to try to raise interest rates 3 more times. Well, duh. To do that, they're going to need themselves a really big up market because they know if they keep raising interest rates, they could have a problem, especially if they stop propping the market. We have a slogan in our trading room: when they stop propping, the market will start dropping. And we saw a little bit of that this morning on the mini Nasdaq. And I thought, well, here we go, because I had made a call yesterday in the room when I saw that that we had a headline on Zero Hedge, one of my favorite sites for watching the market. It's called Zero Hedge. I'll show it to you real quick here. ZeroHedge.com, and they often have a lot more edgier inside news where they don't. Zero hedge means we're not going to hedge the calls, we're not going to hedge our headlines, we're going to tell you what's happening. And you get a lot of stuff on here that you know is very important, and you never see it on the fluffy CNBC sites. So it's often good to have them both going. I like them both, but you're going to get more of a cutting edge financial news reporting on Zero Hedge. Just keep that in mind. But there was a headline in there just like one of these. It was a leading headline, and it said, "Global stock market euphoria continues." And I noted the words global stock market euphoria, and I thought to myself, well, there you go. There you go. That's a problem right there, because that means you could have a real problem with this market at some point. Instead of just, if they would just have a series of normal 2 to 3% pullbacks, what they call pause and refresh, then the bull market, if it indeed is one, can continue to move higher, because if it is, there won't be any problem. But if there's this relentless rigging coming into the market trying to jam the market up, then it makes me wonder, um, what are they worried about having a normal 3% pullback for? Are they so worried that that's going to disrupt the whole thing? I don't think it would if it's truly a bull market, but for some reason that's what seems to be going on. Well, when I saw that article on Monday and we talked about Tuesday, I saw that they were still jamming the market up yesterday. However, it was there, and I can show you right on the charts here. This is the boomerang for mini NASDAQ here. Over here, this is a boomerang for crude oil. So let me just expand the mini NAS chart. I'll show you what I'm talking about. Now, on the mini NAS chart here for Boomerang, I have my PRIMO, which is a price momentum indicator, and the VOLMO, which is a volume momentum indicator. I'm going to show you some amazing ways to use that to improve your Boomerang trading. And these indicators are top secret weapons I've kept to myself for over about 7 years now. And I recently released those. Many of you have them, but you can get they're only $195 each. If you don't have them, and after the seminar today, if you'd like to get them both, just email me at mohan@daytradersaction, and I'll make you a special deal for the package, buying both of them at once, if that would be important to you. Now, take a look at yesterday. I was telling the traders, I said, based on what I'm seeing here, we should be getting close to a point where we're going to start to get more fluid selling coming into the market. Lately, it's been up, 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 and hardly any pullbacks. Well, lo and behold, we started seeing that coming in. This was yesterday's market, not today's. And you saw the same thing, the early morning pressure, but a little more pressure than normal. The stabilization, a little more. This was unique because they ramped them up, but then we got some more selling pressure coming in. Very nice. Then, of course, the relentless buying started, a little bit of pullback, and then again the relentless upside pushing. But you notice the fluidity of the selling starting to come back in. Well, then we came in today, and then overnight on Globex, coming right into the close, and then overnight on Globex, they crunched the market down pretty darn hard here, stabilized them, started popping it back up, coming right into the opening here, and hit them harder again. Then they started stabilizing again and ramping up, a little bit of pullback, and then as the mid-session comes in, they keep pushing the upside, and it got really kind of choppy, to be honest with you. It was a little more choppy, and then coming in the later part of the session, more sell-off, and up they went into the close. So we got, they kind of cleaned up the Dow down, I think 50 to 70 at the peak, and they kind of brought them back. But what inspired me to make that call for a possible stronger downside market getting to come in was the headline I saw on Zero Hedge on Monday about global stock market euphoria. And I thought that's what happened to me way back. I'll give you an idea. In 2016, in our live trading room, we have our NASDAQ live calls. We have our crude oil method, which I'll show you in a minute, which is very effective using 3 to 6 tick stops and steady, ongoing, 90% winning, 80 to 90%, I like to say, 8 to 10 tick plays. And it's just real simple scalping system on Boomerang. Boy, does it work. I've got records going back a couple of years, and it's amazing. But what I noticed in Brazil, and I don't have the articles or anything there. I was buying the Brazil fund in early 2016 in my room, and there's a common adage in trading. You may have heard of it. It's called buy when there's blood in the streets and sell when there's just endless euphoria and tipping the champagne glasses. Okay? Isn't that true? You've heard that before. Well, those are two of the most hardest things to do for a human being with a mind and emotions, because it's just so difficult to do. But deploying that idea for Brazil, I had the technicals behind me, but I was telling everybody, buy the Brazil fund, buy the Brazil fund. We were buying the Brazil fund at several different levels, pretty close to each other, buying dips once I determined that place. Well, you had the Zika flu outbreak, you had the place, the poverty. There was so many problems politically and everything, and that beautiful country with lovely Ipanema Beach and the samba music and everything. Just such an incredible place. But boy, it was getting hammered and hammered and hammered, and I started buying And right after I started buying, the Zika flu came out, and I bought a little bit more as it dipped a little lower. Real worldwide panic, blood in the streets, literally. And I started noticing as the Zika flu got pushed around in the news and everything around the world, Brazil started stabilizing. And I thought, good reason for it to get hammered worse, and it stabilizes. Good sign. And so they started popping back up, and then lo and behold, towards the end of 2017, I got out of the fund with close to a 70% gain for our members in the room and myself and our private hedge fund. And an article came out, and it was talking about top funds for the 2016, and at the top of the list was Brazil. And it was true. It was the top rated ETFs and funds because of my notion to buy when there was blood in the streets. Now, not always an easy thing to do, especially with the current market, because when I saw that article, I thought to myself, this sell side is not only going to become more fluid and trades are going to work out better, but it could be a temporary topping area here. Not necessarily the top, the in quotes, the big top, but the possibility of at least a temporary couple days setback. So I thought this morning, watching the market, I thought, okay, here we go. They were down. At one point, the NAS was hammered down 50 handles. This was it here. It started, as I showed you earlier, it started over on Globex, and it got smashed pretty hard, and then they continued in the morning after the opening. I thought maybe this is going to start something. I had my doubts because it's been so relentless and the riggers have been so active in propping this thing up. Well, lo and behold, they came back in and were doing the same thing, kind of stabilizing everything, holding the dips real light and then popping them up. And then, of course, after a little stronger sell, notice the selling fluidity coming here late today. Then still once again popping them up, and then here we go again with the relentless jam to the upside into the close. That's all fine and whatever, but I'm just making a point that we should probably watch out for any further headlines. Now, something I used to do, I actually used to trade off this. Believe it or not, trade means invest, I should say. Absolutely unbelievable, but the good old Barron's headline, which you can now get online. Now, this is Barron's Asia, but just check for Barron's Magazine. Let's see here. Barron's Finance Magazine. And you can go to this site here, and you can usually see the latest headline for the magazine here. It says this week's edition. You click on that, and there it is, Barron's headline. Now, when you see a headline, maybe next week, maybe the following week, where there's a bull standing on the bear with his foot on the bear with a proud look in his face, and the bear has this terrified look or something, or the bull has a club and the bear is laying on the ground, that is often a very good topping sign, or it had been for 30 years or so. And it's gotten a little more watered down, but just a real fast way to check for further euphoric headlines like the one that I saw on the zero hedge. So does that mean it's a top? Well, not necessarily. Does it mean it's a temporary top? Maybe, but I'm not going to get too worked up about it because this thing is very relentless, and we just need to trade both sides of the market. And so with that in mind, I wanted to talk to you a little about the market today, and let's go into some things about, for those of you brand new, and I see we got a lot of new members here, and thank you so much for joining with us and being part of learning about Boomerang Day Trader. This is our go-to site here. This is boomerangtrader.com. Everything Boomerang is right here, including a recording of this webinar, which will be posted there on the site tomorrow under the blog section shown right here. But what you can do is, first of all, if you're brand new, read the opening page here. And it talks about our 90% winning trade setups. See our long-time proven record. I have both audits on the software, and I have live records of the trades that we audit and monitor every day live in our trading room and trade. And then you can watch this brief video which talks about Boomerang and how it works. And it's very important to understand that. But why not, I say, why not start at the top with a system that is proven for many, many years to give 90% winning trade signals coming from the software? That's good advice. In this world, if you try to just wing it and figure out how to use how to use the markets or trade the markets with all the stuff that's being thrown at you, you'll waste a lot of time for years trying to find the best stuff, and you may not spend enough time learning how to really trade with it. But very important, when you get to boomerangtrader.com, you can go right to the resources site. And as I mentioned, my volume momentum moving average or volume momentum indicator here and price momentum, there's really two elements in trading. There's the momentum of what? The momentum of volume on a market and the momentum of price. I mean, that if you had to summarize it, that's really it. If you know what the direction of the momentum is, or if there's a shift in momentum, you can make some very good moves in the market. And I'm going to show you that next, right after I show you this brief tutorial here on the Boomerang blog. So under resources, you can see here's my price momentum indicator. Again, they're only $1.95 each, very low cost. And you can study this here and learn webinars and everything about that. And again, I'm going to go over how to use them today in combination. And you have the volume momentum indicator, and you can click on these links, and there's a purchase link there, so you can buy these indicators and see that purchase volume momentum. You can click on that and purchase it for the $195, and you will see tremendous changes in your trading for more and more accuracy. But if you scroll down here, this is a recent article I did on trading mindset that's on the Traders World magazine on the stands now. And we have some additional tools for trading. Anything updated that I do in these webinars, we post here on the blog so that you can watch it and get updated. Now, if you have any questions later, that'll be fine. Just write those down or save them, or you can even type them in now, but I won't be able to answer them until I'm quite done here. I'm going to be done in about, I'd say about 20 minutes, and then we'll go into your question and answers. But we do audits regularly of 2-week periods where I'll go through each trade during that 2-week period and show you meticulously how they worked. Just things like that to really get you up to speed on how to trade with Boomerang and learn a lot of things about the markets. So with that in mind, you can scroll through here and we show all the different, the Boomerang's real simple, and I'm going to show you the methods here today. But we have one particular video which talks about the two methods right here, the two Boomerang day trader setups for earning trades. That's the level 1 trade and the level 2 trade. Those are the two basic setups. There's one slight modification to that, and that's, I'll go over that. I'm sure we'll run into it here when I'm going over this today. But that's basically it, and that's explained in that video on the home page as well. And then we have other videos that talk about, like here's one on the system components of Boomerang and the trade method rules. I go over that again. And we just believe that repetition is the mother of all learning. So by repeating things over and over, and you take notes and you get it down and you go, yeah, it's really not difficult to learn how to trade with Boomerang. Trading is not easy. I'm not saying that. I'm not saying that you won't get stopped out sometimes, because the markets will really twist you there. It's a difficult business, but with Boomerang it does all the work for you as far as spelling out the trades and everything. So that's a real advantage. So with that in mind, let me show you here on the chart, and then tomorrow this recording will be posted over here. Just go over to the blog section, because you'll see here's the announcement for the webinar today. This will be replaced with a recording of the Wednesday 1/10/2018 webinar. That's where you look for it. So first of all, let's start out with mini NASDAQ. And as I mentioned, I've got my price momentum indicator and my volume momentum indicator. Now on Boomerang standard, when it comes right out of the package, we got these two really excellent indicators here, which is a market force indicator, and this one here we call bias index number 1, and it has all kinds of simple methods where you can see the shift See how the shift to the yellow histogram, and then you get the shift here, and the price market force, and then the price starts moving lower, just as a simple example. I've replaced those for now on today's NASDAQ chart. Just to keep it real simple, I have these two new, what I call my secret weapons, that I finally released after over 7 years just using them privately, and they're available at a very low cost. So this is today's market, and the one characteristic of using these together that's really unique is this. Now, here's the market early this morning running up, right? Well, for using the method on, I'm going to show you two things right now: how to discover when a new trade setup's coming in, and when you can start to look to pick off a top. If you want to take a riskier position, try to pick off a top, which I often do in the room. Our last trade of today, I did that as they were running up, and we had a let me see, look at my notes here. Our last trade today, we had a 1475 point winner. Now, Boomerang method scalps for 3 points on mini NASDAQ, and 10 ticks, 8 to 10 ticks on crude oil, which I'll also show you in a minute. But I wanted you to know that I do use my tools here, namely PRIMO and VOLMO, to pick off tops. Now, here's how one easy way to learn to do that. Now, I'm not going to teach you how to do that exactly, because it requires more tools than just PRIMO and VOLMO, but I'll show you how a top will develop. So here's a boomerang trade, first of all. Now, on boomerang, it's remarkably simple using PRIMO and VOLMO, because all you're looking for is matching. Here's the volume. So you always look first. Volume will shift first before price. So watch for the price to come after a volume shift. Now, what we have here is, see this, the market's moving lower here on this dip. You had, first of all, this red line change up here. This is the price momentum line with a lead line under there that's a little faster, but you look at this thick red line and you can see with that moving lower, the price came down. Now, I just want to talk about this up move here. But so shifting off of that, what happened is, you notice right here is you get a green histogram on the volume popping up. This is the only volume indicator I have ever seen personally in the markets in 30 years that can be used for day trading, and that really works. I've seen a couple. It's very rare to find a volume indicator, but one that works for day trading, very hard to find. Most I've found are junk, and they don't tell you anything. They just were so basically designed to have something to sell to you. Not me, I don't do that. But you notice here that the underlying momentum line changes to green, and you got histograms up on the upside. Well, that's telling you to watch, start to watch for a upside move, and probably a boomerang trade on the buy side. So here's the boomerang channel opening up here. See that arrow? When that closes after 450 ticks transpires, because both these use 450 ticks. Uh-oh, I just set this one and it says 350, so that was just a little mistake because I loaded this chart. But that's okay. Takes 10 seconds and we got to fix there. 450 ticks. Let's go back there. Won't change it much at all. Make sure I got the right day and everything. Okay, this is what we just had this one here. So here's boomerang now starting to catch support. First thing you know is the volume shifts. The strong volume, first of all, it came down and hit this peak green level line. See when that volume spiked down there, hit the green line? It was at the exact bottom of the move. Exact bottom. That's my VOLMO for you. It'll show you stuff like that all the time. And so then the prices started bubbling up a little, and you see, notice the green histogram change on the price momentum indicator, the PRIMO, we call it, indicator. VOLMO, volume momentum, PRIMO, price momentum. The price started picking up some momentum, and the green line changed underlying here. Well, as soon as the volume got up above this white zero line, and you see the PRIMO indicator moved, this thin dash line moved above that as well, and indeed this green momentum line crossed the zero line here, as well as the zero line on VOLMO. you're good to go. You got a lot of force that's ready to take off in the opposite direction there. You buy a pullback to the sig line, which is marked on Boomerang by these blue dots on the buy side, yellow on the sell side. You buy this pullback to the signal line. You see that? You get long, and the price there at that time was 66.40 and a quarter, and we're just looking for a 3-point pop. Well, it popped 7 points real quick, and you can go in, and as you get used to using it, you can try to trade for more. That's not a problem at all. But the method itself, the core method, just trades for 3 points, and on 4 contracts, that's about $230 or so. You do that 3-4 times a day, you're going to have a nice paycheck, and that's our goal. So the market, I'm just saying, on the core method using VOLMO and PRIMO, it's quite wonderful, because all you're looking for is the momentum line, that's this thick line here and here, to cross over the zero line. What could be simpler? And then take the next pullback to the signal line. You got a lot of force when that happens, and they jam the price right up. You see that? Now, if you have any questions on it, I see that. But just keep that in mind, and I'll answer your question later. Now, these markets, this is a still chart, obviously, but the price are moving a lot quicker and all that. But still, you have rock. Here's the key. You have exact, on Boomerang, using VOLMO and PRIMO, you have an exact thing you're looking for, which is that line to cross over. Maybe the price are flying all over the place and everything, but you're looking for that and that. And once those two are there, you're trading a pullback to these blue dots, where exact specific pullbacks on this thin little signal line here. They're marked and alarmed. You're not worried about where don't let the prices flying all over the place confuse you. You're just focused like a laser beam on that pullback to the sig line, which is shown over on the far right edge of the chart. And you can see when they merge together, the price marker, which is this, and the signal line, which is this one, they'll be colored when you're on the right side, and they come together, boom, you hit your buy. Let's find it here. Hit your buy at the market, and up you go like a rocket ship. You see how they went up like that? And when you hit your buy, you can set, I have a library of brackets, but you set like a plus 20, minus 20 is what I do, or plus 16 is 4 points, minus 20 is 5 points. Use a minus 5 point stop automatically on NAS, and you can set for 4. I set for 5 because I may get out, or I might look for a larger scale move. That gives you up to 5 points there, and you can always drag and click it and expand it too. So, but that's how simple it is, and you can just use good old NinjaTrader 7, and it's all we need. It's very simple to trade with Boomerang. Now, you might have asked, what are these up here? This we usually normally in Boomerang we have you add a 14 period Bollinger Band in here. These are something unique and new, not Bollinger Bands, but what I call price pressure bands. And we want to take trades when the price pressure bands are activated, meaning this thin dash line crosses over this thick line, and you get a pullback to the sig line. And look at how the price pressure bands held together with the dash line on top all the way to the top of the market, exactly to the top, crossed under here, floundered a little bit, and then they reversed right here, and down they came. You see that? These are available as part of my Boomerang roadmap package. They're not available individually because there's 6 different indicators in there. And I'm not an indicator salesperson by any stretch, but this is more of a trading course. It's called I'll show it to you real quick here. You're going to love this course. I designed it because I got so many requests over and over for it. This is the Boomerang roadmap, and it's now available as of this date back last year, or in 2016, and just traders really raving about it. But it's got 6 different indicator features in here, and you can go in here and learn more about it. You want to order it, just get it in. I'll get it right off to you, and it's got 2 hours of instruction, everything. Really learn a lot about the market. It's only $295. Most of the guys out there, trust me, I know my industry, they'd be gouging you $3,000, $4,000, $5,000 for a course like this. Mine's $295. Easy. Whenever I do make the price, I always like to say that way I can honestly tell them it's worth 20 times the price, in your first year of trading, and that's a fact. So, if I was charging you $5,000, I don't know if I could say that. I could say over the lifetime it's worth 20, but not in the first year. I like to use that as a measurement. I like to keep our prices very low to help the traders. Many new traders trying to learn, so I respect that because I was once one of them, as we all were. So now I want to show you how, in addition to the price pressure bands, to see that the top is still holding, let me show you how that works on the VOLMO and the PRIMO. First of all, you see the volume moving average run up and tapping these red lines. That means you're getting real strong spurts of volume hitting these exhaustion levels. Then you get 3 taps on the exhaustion level up here. See that? 3 taps, 1, 2 on this red line right here. See that? Well, look how as the price are jumping right up into those 3 taps, that ends up forming the top, and then they, like the markets often do, they make another little additional top, and that seals the deal. But look at what you can do. So here they are ramping up and tapping the top up here on the volume. You look up here and they're very close to the red line up here. So you got quadruple 5 times tap on the volume exhaustion, not quite hitting it up here, but you can see it's getting close to peaking here on it just gives you a sign of that. And then when they pull back and they ramp up again, now you have obvious, crystal clear, obvious divergence. So here they are jumping up here. The market pulls back, runs up, and actually makes a higher high, but look at the histogram here. And you had a cross under on this pullback of the volume. The volume started weakening on this up move in here, and even when they jumped up here, there was a little micro green histogram here, but look at how much the volume is weakened, and you had a cross under of the faster momentum line over the key momentum line, this red line. And that traded under the yellow line, which is one of the rules, telling you this is a top. Temporary top, not a big top necessarily, could be, but a temporary top. And then same rule applies here. You get the red histograms and you get the VOLMO and the PRIMO coming down here. Well, this is a hard fast drop, so you didn't get the red line crossing under the white here and here until this level, but there was still a yellow dot there at 47, and 47 dropped them down to 42.75. You still were able to squish out a 3-point move there, which is the goal of Boomerang. And look here how they reflected back. Now you got a downside momentum push and a little pop back, but not enough to disrupt the whole program. And you just wait, and then as you see here, get another sell arrow. You're already under the zero line here. Although the momentum line has turned green, you're still already under the zero line, so that's the first sign that the momentum is still weak because the momentum line is under the white zero line. You got the cross under, red histograms under the zero line, the faster line under the zero line. It's a second level trade, and this is a classic Boomerang level 1 move and then level 2. And so once these turn red, the momentum on the volume's already bearish. You just trade a pullback signal line and down you go. So if you were trading on this morning, following what I just showed you, and I just randomly grabbed this example, it happened to be today's, I think it was today's. You have 3 points, 3 points, 3 points. That's 9 points. Just to give you an idea of the money. Now I'm not doing this to try to hype you on how much money you'd make, but I want to show you on a small, what I call a blue collar working trader's account with 4 contracts in a $5,000, $6,000, $7,000 account, and always have a little extra cash handy to keep your business going. You had 9 points, right? 3 Boomerang trades for 3 points each. It's 9 points times 20 bucks. That's $180 per contract. 3 trades is about minus $14 commission. That's $166 per contract times 4 is 664 bucks. So from my time, 7 o'clock, which is 10 o'clock New York, to 753 in less than an hour. You made $664 on a small account trading 4 contracts on NASDAQ on this. And Boomerang is only $11.95. So you've paid for more than half a Boomerang in 1 hour on 3 trades. Plus you got the rest of the day left. Here's another trade. I mean, I could just go over what I just showed you. I can show you that relentlessly and endlessly in the markets here. Trading Boomerang. This was today, and of course today, there's a lot of choppiness in there. This was at pullback here and everything, but I'm just showing you don't have to read the markets. You just let Boomerang read it for you with the precision proven methods, and you'll do very well. So that's following the VOLMO and PRIMO, using them in conjunction to pick off tops and bottoms, to know when they're coming, to get ready. Or if you're really brave, you can come in here and you can see, once again, this is the example I just showed you, how the momentum was clearly weakening here, big time weakening on this pullback. And then when they jumped them up again here, it's very weak. You could short into this or take short on the first red candle, and that's a couple examples of how you can trade the markets. But it goes on and on relentlessly. We get real strong washout type signals where it'll actually color the chart here and show you where it's really getting washed out. And that'll can also, when you see the green line come in here, the volume start weakening on the downside and the momentum picking up a little, this is where you can buy these dips with confidence and just catch the pops as they roll them back up. All kinds of stuff you can do. So what I'll do now is I want to show you how crude oil works, and then we can go into your questions or anything that you may have on that. But welcome to the 2018 markets. They are relentlessly moving higher, but NASDAQ is the most active. And right now the NAS and the Dow Jones Industrial Average, they're out of sync a lot. You got the Dow up, 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 and the NAS getting hit. Stuff like that. There's a lot, it's its own market really right now with all this technology and everything coming out. NASDAQ is its own market, practically speaking. It's pretty amazing, frankly. So now I'm going to pull this crude oil right to here so you won't mix it up with the NAS chart. And because I want you to have a real big wide picture of crude oil. Now this is a method that we use for trading every day in my live trading room, and we have a lot of Boomerang traders in my live trading room. It's a great thing to do if you own Boomerang and you join my room. I've made the price incredibly low. It's only $149 a month. You can join my live trading room and just trade crude oil, because I track those trades every day, so you're always in sync with exactly what to do. So it's like endless trading, ongoing trading, 3-4 times a day, just trading you the method I'm going to show you right now. You own Boomerang, you have that all set up, and you just come in there every day, and we average about, during the time that I track it, which is 8:45 Eastern. I like to use Eastern time. 8:45, 9, 10, to probably about 11:45, 3 hours, and you want to be a little bit careful after that. The market can still move, but those 3 hours are really good, really active. Of course, crude oil trades around the clock, but that's just a good idea. Let me scroll this back a ways, and I'll just show you the method, and then let me see how many days I got loaded on here first of all. 8 days. Okay, so we got 8 days loaded on here. I'm going to show you the method and how we do it in the room every day, and then you can, if you own Boomerang, you could trade the method or just follow it. Now, one important modification rule that we had recently, and I tested it and tested it. I saw it happening over and over, so I did test it, and I put it officially here on the blog, always under the resource section. New enhanced method for Boomerang entries on reversals using the Cobra. Now notice on reversals, this method is employed after a market's gone one way and it's getting ready to move the other way. Not generally flat markets, although it's an important measure to use for that also. But where it really comes in handy is on a market that's run down and then it's starting to reverse back up. Let me try to find an example of that. Classic. Okay, now what's deployed here are two indicators from the Boomerang roadmap, which, let me find one while the market's open. These are Globex ones. I'd rather use a chart where from the market when it's open. The method I use, and this is crude oil's been really nuts lately too, just ramming way up. I mean, it's pretty amazing. I had called for a pullback towards 42. They dropped down as low as 44, and ever since then it's been just 20 bucks higher. So my call was pretty good, but they didn't quite get to 42. They got to 44, and it's been working 63 lately. Just really heavy duty. But the way that it works, here's a, oh, that's kind of a Globex one. Well, let me do that because I just don't want to spend too, I just want to show you the chart pattern. That's really what counts. You'll see it showing up every day, and I can go over some stats in our room with you too if you want. Here's the chart pattern. Now, skipping the buy trade here, what I'm looking for using this modification rule, otherwise we're just deploying the boomerang rule. Let me show you that. First of all, step one, it's in 4 steps. Here's the market. Step one, was there a buy or sell channel? We're going to use this example right here, this exact trade. You can use any of them, but this one's really simple and clear to see. Yes, there was a sell channel. Once the candle closed, you say, okay, have the price pressure bands opened? Yes, they have. Now another indicator, which is from the Boomerang Roadmap package, which you'd require to have for trading the crude oil here. But like I said, if you email me, I'll make you a special deal on it. If you're going to buy Boomerang and get the roadmap and you want to trade crude oil, just mention that and I'll make you a special deal. Step one, has a channel open on the buy or sell side? Yes. New channel on the sell side. Have the price pressure bands opened, which means the dashed line is crossed under the solid line. That opens the sell side pressure. Yes. Have the dynamic, or then you ask, has the filter crossed? And that's this brownish white line crossing under the orange line. And then you look for the orange line to form a scoop kind of over the trade channel. Now that's going to be very valuable because we're going to use that as a key stop level. And I'll explain that in a minute. It's very simple. So has step one, has the trade channel opened? Yes. Step two, has the price pressure bands open? Yes. Step three, has the trade filter line open crossing under, in the case of a sell, in this brown line? Yes. Okay. Then the final arbiter, or the final vote by the jury of whether to take the trade or not is, and this is so important, the COBRA right here. And that ties in with this modification rule, the enhanced method I'm talking about here, using the COBRA. The COBRA is this dashed thicker line here, and we ask ourselves, has the COBRA, and it would need to be red color obviously, crossed under the dynamic trend band number 2? Yes, it has. Even though it's green, it has crossed under the dynamic trend band number 2. That's its thicker line up. These are called the dynamic trend bands, very vital part of Boomerang. Has it crossed under that? Yes, it has. And also, has the Cobra crossed under the orange filter line? That's the 4th question. And the rest is trade a pullback to the signal line on the next one. So as soon as, here's the channel opening, the Cobra is crossing under the orange line right as this new channel opens. You can see that, and you see it live here. The prices drop. Everything's opened here. You trade a pullback to the signal line, and you scalp for 8 to 10 ticks. Now, I would say about 7 out of 10 times, 70% of the time, the market is going to drop with enough force to give you a quick 10 ticks. Or, sometimes there's a little grind to get them down to 10 ticks. But generally, you're going to get a fast move down into the 8 to 10 tick zone. And I want you to take the prices when they dive down into that zone. But a lot of times like this one, they're going to dive so hard that before you even make a move, it'll hit 10 ticks. And if you got a bracket on there, it'll take you right out for 10 ticks. So that's how to deploy the Cobra, and I do it every day. And oh my God, it makes the trading so much accurate, because by using the Cobra on the orange filter line, you're just adding so much extra confirmation to that trade. It's really, really wonderful. And so there's a 10 tick move there. I just wanted to show you that. And you can go back and see these all throughout Boomerang here. Give you an example. Again, this Globex trading, but look, here's the dynamic trend bands crossed over to the upside, matching color, pull back to the sig line, 32 jumps up to 95. Wow. Or I'm sorry, my mistake. I didn't read that right. 82 jumps to 95. There's 10 ticks there. Didn't sound right. Here's an example here. Sell channel. Price pressure bands opened. Dynamic trend band 1, bearish color, flat. Dynamic trend band number 2, so you use caution. However, there's the orange, or the Cobra, moving under the orange line there. Trade a pullback to signal line, and down they go. This is just a lot of whipsaw on a notice very flat dynamic trend band number 2. That's a big caution there. Unless you got all the confirmation. You don't have confirmation, you see, on the price pressure bands. They're flat and they're on the opposite side. There's no confirmation of a buy up here. But what you watch for then, here's a sell. Price pressure bands are on the downside. Now notice here, notice the Cobra crossing under the orange filter right there. You go short, 89, and they knock them down to 59. Or I'm sorry, 69, knocking them down to the entry is right here, 72, sorry, 72, or perhaps 70, knocking them down to 59 right there. And what you do is you can have a 10 tick bracket on there, but make sure and maybe draw another line or just mark it with your cursor. When those prices dive into that 8 to 10 tick zone, just hit your exit button. It's a beautiful method. We use it in the room every day. Keeps it real simple, and there's just ongoing winning trades to the tune of 80 to 90% live almost every day. Some days we only get 1 or 2 trades. Average is probably about 4 a day, 4 to 5. Some days are busier, some are slower, and you just don't have to push them, because if you come to work, you're going to have the 2 trades, and one contract's $100, so even 3 trades going to give you $300 minus a commish. So if you're trading 2 contracts or whatever, it's a very nice paycheck. Here's a little whipsaw going on. So you get the buy channel, and again you see that they're already open in an odd sort of way, but you still have the filter open here. Matching dynamic trend bands, a pullback to the signal line with the Cobra crossing over the orange line. That's the key. Get it crossing over that orange line, pullback signal line. I could show you many examples of that with the Cobra crossing the orange line, prices jumping up, and even if they pull back against you, you have the confidence that that Cobra is up over the dynamic trend band number 2 in the orange line. They're going to generally lift back up. Here's another example. See try to blow it up here a little. See the Cobra crossing under the orange line. It's a little bit whipsaw, but then you see the dynamic trend bands crossing. You got to go short there. And this was one of those kind of markets, you've seen those where they kind of fool you, and all of a sudden, kablamo, it's a straight smash to the downside. This was identified, traded by Boomerang, and made clear you had to tolerate a little whipsaw. I mean, if you got short there at 04, they did whip them up to 9, but that's no big deal. But then all that whipsaw ended in just a crunch to the downside, what I call a crunch. You got to love those crunches when you get in them and they don't grind you up too much and then they get hammered. It's like quite pleasant to see it go your way that quick. That's why I like those. That's why I like shorting a lot of these ramped up markets, because when they finally fail, they get crunched and it's quite pleasant. As the floor traders used to say, that's where I learned that. They slide faster than they glide. In other words, gliding up, sliding down. They slide faster than they glide. Here's another classic boomerang trade here. Sell channel. Did the sell channel open? Yes. Is the candle complete? Yes. The sell channel open? Yes. Have the number 2, have the price pressure bands open? Yes. Are the dynamic trend bands, or has the filter opened? In other words, has the brownish white line crossed the orange line? Yes. Right here. Have the dynamic trend bands matching or crossed under? Matching. Trade to the signal line. Yellow line, crystal clear marked. That's all you're concentrating on, is getting short there, not worrying about the rest. And boom, down they go. 10 ticks. So following the method works. Now sometimes, like here, they just jam them up so hard and fast, the filter or the cobra crosses over the orange line and the dynamic trend number 2. After they've run up, there's no trade there. But look at the other side. Watch how this filter constantly works in your favor. Question number 1. Remember the 4 questions. Has a trade channel opened and the candle closed? Yes. Number 2. Has the price pressure bands opened in that direction? Yes. Dashed line crossed the solid line. Has the filter opened? Yes. Here. It finally opened here. So you don't trade until you see that filter open, because we're going to be using this orange line as a very tight mental stop there. Usually 3 to 6 ticks on the stop. And then have the dynamic trend bands, are they matching? Yes. Trade a pullback signal line and down they go. Now, I know this late in the day, close to closing, but I'm just using the chart pattern to show you, because the method works any time of the day, over and over, constantly, over and over again. It's quite wonderful. Here it is here again. Has a new channel opened and the candle closed? Yes. Have the price pressure bands opened? Yes. Has the filter opened? Right here on this candle, the filter opened? Yes. Are the dynamic trend bands crossing or matching or crossing over? Yes. Pull back to the signal line. 44 jumps up to 57, 10 ticks. Here's another one. Has a new buy or sell channel opened? Yes, a sell channel. Have the price pressure bands open? Yes, they have as of this candle. Has the filter opened? Yes. Trade a pullback to the signal line. Or has the cobra crossed, the 4th question, has the cobra crossed under the orange line and or the dynamic trend band? Normally you want to always use the orange line. That's going to be a line that's going to really confirm it. The dynamic trend band's good. Ideally both, but always confirm it with the orange line. Yes. Trade a pullback the signal line at 47, and 47 drops them down to 38 here for 8 ticks. Some of these you have to take 8 ticks, but that's why I say, if you got 80 bucks in your pocket or 100 bucks in your pocket, does it really matter that much? Nah, it feels about the same, you know. Reach in your pocket, there's 420s or there's 520s, who cares? It's about the same. So that's what I'm saying, 8 to 10 ticks, just grab that money. This is a scalping system. You're not trying to catch the big move. You want to get in and get out based on a method that works about 90% of the time. And the comforting news is, and I don't really have an example to show you, but the way I work the stop here, let's work this trade here. Question 1, did a buy or sell channel? Yes. Sell channel open. The price pressure bands open? Yes. Did the filter open? It did right here on this candle, right? So we trade a pullback to the signal line and down they go. Now immediately once I get a trade, I say, okay, the first thing we're watching especially like in this case, if it's nearby, we're watching dynamic trend band number 1. So if you're short here at 658, dynamic trend band number 1 is up here at 66. So it's about uh, 8 ticks away. But then as you're watching the progress, so now here 68 drops right down to 46, or I'm sorry, 58 drops right down to 46. There's your trade. But what you're doing, if it progresses, let me find an example here. Okay, like a trade like here, you're just using the nearest filter lines and or dynamic trend bands as a mental stop for the trade. It's really that simple. Did a new channel open? Yes. Are the price pressure bands open? Yes. Did the filter open? Yes. Pullback signal line. Well, it's way up here. Usually on these, what I often do is just use a random, try to get a random like 3 tick discount because they already screamed higher here. And with crude oil, they'll often continue like this. You can buy them here at 50, what is it, 57, and it's still panned out. But usually on something like this, you're better off if you can just get a little bit of a discount, like 3 ticks. So it was at 57, and then they down to 53. So you get a like 3 tick discount, 2 to 4 ticks, to give you a range. Just buy a little pullback, and that'll get you closer to your goal if they take off in your way. So once you do that, the first thing you start doing is you're looking for a mental stop level. Well, here obviously on the cross under is great. If you get a counter colored candle, that's a warning. And if you get a counter arrow, the minute I see an arrow blink, I get out. I don't even question it. It's no, something's wrong. The underlying is shifting, and the algorithm is it's changing the boomerang algorithm, and you're getting a counter blinking candle. I just get out. I don't want to risk it. I don't care if it goes way of the trade. It's just another trade. There's so many of them available. But so on this trade, say you got them in there at 55 or something, you'd be monitoring the top of the channel. I mean, there's several areas you can watch. The top of the filter, which would have been at 50, and then you have the dynamic trend bands at 49. So that's a pretty serious area that should hold. Otherwise, you're kind of taking some risk there. We use what I call an airbag stop for 13 ticks. You can put that on automatically on your brackets because that way, just like an airbag in a car, I often use the example. If your airbag goes off and you're in a bad accident, at least your body's going to flop into this big cushy airbag, and it's going to, when it pops out of there, it's going to hit you hard, and you might need a little chiropractic adjustment or something for your neck, but it's better than having your head go through the windshield, right? So similarly, these airbag stops, the 5-tick stop or the 5-point stop on NASDAQ and the 13-tick stop on the crude oil, if that gets hit, it's not the end of the world. It's no big deal. But if you can use this filter method, you can work very tight stops, and the trade's either going to work out or those areas will get hit, and you can just blow the trade off for a couple tick loss. So that's the method I've showed you several times, and you can just see it happening over and over again if you just stick with it. And when they're choppy, they're choppy. You don't trade. You don't have to figure out every move in the markets, but when they're choppy, just stand aside, wait for clarity. Don't guess on trades. Try not to gamble. Choppy markets are part of what we do as day traders, but they're not deal killers. You just wait for the setup that looks like this, where everything's matching up. That's the purpose of the boomerang indicators. So with that in mind, before we go to your question and answer session here, I'd like to share, well, let me just use this once because I got it handy. I see my other, I do, well, December, of course, is a spottier month. I was on vacation for a couple weeks there too, but let me just go over crude oil in January. Tuesday, the first day of the month for January, just crude oil. And these are all done live monitoring of these trades with traders taking them. I take some of them, not all of them, because I'm busy with NASDAQ, but 3 crude oil setups. There was only one on January 3rd, but this is a second day back from the market, so everything was kind of getting back in sync. We had three trades on Wednesday, two that I did live, one for 8 ticks and one for minus 3 ticks. I got in and the market started getting all full of whipsaw. Four setups on the next day for crude oil trades. Two on the next day. It's kind of slow in January, I have to admit. Crude oil's ramping them up, but the actual setups are a little less than usual. Four yesterday, and there was three today. But keep in mind, four setups, one for 8 ticks, three for 10, was $462. It's a nice little paycheck, you know. So that's just for today. Let me, while I'm on to it, we're recording this, I go over to, and again, these are all day-to-day monitored crude oil trade. I got December here, but we got the first part of December was more active. Yeah, this gives a good example here. Okay, so 5 trades on December 4th. Five trades next day. I'll just go day by day here. 5 trades, 6 trades. 2 that I did live. 1, 2, 3. 3 trades the next day. 1 that I did live. Only one trade on Monday, December 11th. Who knows why? You got to wait for the exact setup. If they don't give them to you, then you got the day off, or you just don't trade that much. 3 setups on Tuesday the 12th. No setups on Wednesday, December 13th. Go figure. I don't know. I have no idea. There was 1, 2, 3, 4, 5 trade setups on December 14th, Thursday. So the next day they spring back with 5 setups. 3 setups the following day. 1 on December 18th. Now we're getting into that holiday period, but we had 4 of them on December the 20th. And now you're getting into Christmas time period. And I was off during the period, so nothing was recorded much then. But so you can see 2 to 5 trade setups a day live. But if you own Boomerang, you can trade it, as I was showing you on these charts, round the clock. So it's not just limited to the 3 hours that I trade every day on the crude oil, but you have a much more substantial period of time. So with that in mind, thank you for joining us for the webinar today. Really appreciate it. Good to see it. If you have any questions, email me at mohan@daytradersaction.